In this week's Stockscores Market Minutes, I'm going to show you how to make money trading those strong stocks, but buying them at the right time on weakness. Plus, I will do my regular weekly market analysis, try and figure out if there's another crash coming. We'll do the day trade of the week on HJLI and do a market scan in search of opportunity, all coming right up. All right, so how do we make money from strong stocks when we don't want to chase them higher? It's one of my rules not to chase stocks higher. But in order to do that and still trade those strong stocks, we have to be willing to trade them at higher prices. And so what I like to do is find those stocks that are in strong upward trends and then buy them when they pull back to their trend line and then break the pullback. And I'll show you on a chart how to do this in just a moment. We can do this whether we are day trading, whether we are swing trading. It can be done in any time frame. What's critical is that we have a couple of things to look for in the chart. First of all, stock has to be in a longer term upward trend. Second, there has to be a pullback and then a break of the pullback after the formation of a rising bottom. Now let's jump to the charts and we can see how this looks. Here is a day trade example. And again, we can do this whether we are day trading or long-term trading. I'll show you a day trade first, and then we'll do a longer-term trade. And here you can see the stock is trending upward. What we want to see, though, is when the stock runs up and then pulls back and then breaks the pullback from a bottom that is higher than the previous bottom. And you see it happened here again, breaks the pullback from a bottom that is higher than the previous bottom. Now, you don't want to chase stocks when they've really run away from their trend line. So you always want to be conscious of where that trend line is. If it runs away from the trend line and makes a pullback like it did there, that's not good. We still want to make sure that they are near the upward trend line. Now, let's take a look at a longer term example because I know that not everyone is a day trader. And so here we can apply those same concepts to Tesla. Tesla was in an upward trend. It pulled back for a while. Now look, it tried to break the pullback here, but there was no rising bottom. However, here you have a break of this pullback from a higher high, or higher low rather. So this low point is higher than the previous one. It happens a few times on this chart. Here's another situation where we've got a nice strong upward trend. We pull back a little bit. It doesn't look like much of a pullback, but it was. And then we broke that pullback from a low that was higher than the previous low point. So you're always looking for the breaks of pullbacks from a higher low. And we start with defining these lows, which we call inflection points. And we do that, and then we look for the break of the pullback from a rising bottom. These are all things that I can teach you in the different courses that we do at Stockscores. Certainly go take a look at stockscores.com in the trader training area. There's videos in there about how all of this works. And this is one of my strategies called a pullback play. All right, let's get into this week's regular market analysis, starting us off with the U.S. markets. And we'll take a look quickly at the S&P 500 on the short-term chart. And you can see that we are in a nice upward trend in the short term. We've been sort of struggling with resistance at the all-time highs. And for most of the last 2 weeks, we've been sort of very quiet underneath that resistance. Until we get a strong breakout, I think the buyers are lacking enthusiasm. You can feel that there's some selling into strength right now. Anytime stocks are doing well, often in the morning, they'll give back a lot of their gains into the close. So the buyers are tired, and I think that you have to be aware of that and take a more aggressive selling strategy with your short-term trades. Now, with your long-term trades, we're still okay because there is no break of the long-term upward trend line. So you can see we're in a nice upward trend. Again, we are stalling at the all-time highs, which I've talked about for the past few weeks. I am concerned that we could see a break of the upward trend, in which case we could see another bit of a correction. However, there is no sign of that yet. So stick with the trend, remain long stocks in general, but I would say dance close to the exit door because markets that rally into resistance often get stuck at resistance. Now, the small caps have been underperforming the large caps in the last little while. You can see that the small cap index is far below or we're currently far below the all-time highs. That's okay. We are still in an upward trend, but certainly there's less excitement in the small caps the last couple of weeks. Still a bullish trend, but not as much action there. Moving along to the Canadian markets, you can see that the Canadian markets have also been going sideways for the past few weeks here, a couple of weeks, and we're stuck in that sideways range, but the bottoms are rising in general, and that means the buyers are in control. So no need to get too worried. However, if we start to break down through support levels, start to break upward trend lines, we may be seeing some profit taking. And so keep an eye on this chart for that sort of thing. Looking at the longer term chart, the S&P is at its all-time highs. The TSX is below its all-time highs, more like the Russell 2000. And that is perhaps the emphasis of energy stocks in the Canadian market, dragging it down, the banking sector sort of lagging because of the weakness in the energy sector. But still, we're in an upward trend. So until that is broken, I would remain generally optimistic. The TSX Venture, with its heavy denomination of mining stocks, is in a nice, strong upward trend, starting to show some toppy signs, but we are not breaking the upward trend line yet. So remain cautiously optimistic on the microcap stocks in Canada. Looking at commodities, we will take a look at gold, and I've talked about the importance of being cautious in the short term with gold because the trend has gone parabolic and has run away, and it's now likely to pull back to the upward trend line. So my long-term outlook for gold is still positive, but short-term, I think that there's a good chance we will see further weakness on some profit taking in gold and in the precious metals stocks. Oil is boring. It's stuck in this very narrow sideways range until it can break one way or the other out of this range. I wouldn't get too interested in that sector. And finally, the fear chart, you can see that fear is slowly dropping off. We're in a downward trend, but we're still in elevated levels from where we were. And so I think we still have to be cautious as volatility could pick up at any moment. But for now, it's pretty quiet out there as fear slowly comes down. So my ratings then, I remain neutral long-term on both the Canadian and US markets simply because they are bumping up against some resistance, but bullish short-term as the trend is generally up, although the last couple of weeks have been a bit quiet and sideways. Gold, neutral long-term, bearish short-term. I do think that the market needs to pull back to its trend line. And oil, neutral on both time frames. So while most of the market is pretty quiet in this sort of summer slumber that we often find ourselves in the summer times, every day there's still stocks that are attracting a crowd of emotional traders. And these emotional traders are really willing to chase after those trends. So short-term traders, if you're a day trader, a swing trader, you really want to focus on the stocks that are very liquid, which means actively traded, and very abnormal in terms of their volume. They're trading much more volume than normal. And when we look at the day trade of the week, you'll see that. So these are the places where you can find good opportunities in the short-term trades. Now, the longer-term trades, the trend is still up. We are a little bit sideways the last couple of weeks, so I do think some caution is warranted. Gold is pulling back, and oil is relatively boring while fear is falling. All right, let's take a look at the day trade of the week. And again, I do this for educational purposes. We have a large following of day traders with Stockscores, my website. And every day I have an active live webinar that runs where you can watch my analytical screen through the day. There's more information on the Stockscores website about that. And so this day trade of the week is one that was highlighted with my algorithm. It is HJLI, which was a big mover on very high volume on Friday. The key indicator that we use is the Stockscores action candle, which is that little pink dot right there. That was our initial entry. But I like this one because it's also a good example of a pullback break. So even if you missed that first entry, which had a quick run higher, there was a second chance when the stock broke its downward trend line from a rising bottom, which is exactly the lesson that we talked about at the top. And then the stock went for a nice run. Now, the gain from the initial entry to the highs was about 25 times risk. We closed the day at 6.8 times risk. So we'll use the closing price as our economics for this week, although certainly there was an opportunity to lock in much bigger gains. But for $100 of risk on this trade, required 5,520 shares, which was just under $1,900 in capital. That was a 6.8 reward for risk ratio at the close, which represented a 36% return on your money on a one-day hold. However, again, it would be pretty reasonable to have got out of that trade around there, which was about 100% return on this particular trade. All right, let's now jump into the Stockscores Market Scan tool. The Market Scan, a way to look for longer term trading opportunities, those things where we might hold for weeks, months, that sort of thing. We will jump into the Market Scan tool now. I run these scans every week, or pardon me, every day at typically about an hour before the close. We're going to run the Abnormal Breaks US scan, which is sort of my favorite. There's a Canadian version of that as well. You have to be an investor member of Stockscores to look at this scan. And as we run through the charts, we're looking for breaks from predictive chart patterns with abnormal activity. So if we just pause for a moment and sort of dig into this stock, DSGT, you can see very abnormal volume, very abnormal price action. The problem is there's a lot of shares that have traded in around this area right here, and that's going to minimize the upside potential. So that would be one that I just wouldn't take because of resistance. It does have some potential to move higher, but I would give it a 6 out of 10, which means I think it has a 60% chance of moving up and getting through that resistance. Now we'll pause on this one as well. This was the day trade of the week, HJLI. If you think about whether it was worth trading longer term, I would say no. And the reason is it had fairly strong resistance right there. You can see this old price peak served as resistance. And that's why as a day trade, it went up today and it hit that resistance level and it ended up closing way down here. So sometimes even if you're a day trader, if you look at that longer term chart, the daily chart, let's say, you can see areas where there's going to be a supply of stock at resistance. Again, those are things I'll teach you in my different courses, but the market really shouldn't be too surprised that this stock sold off into the close today because it was hitting that long-term resistance on the daily interval. So those are some of the things that just come out of these chart patterns. Once you get to know some basic rules, and there's really just a handful of them to understand how to read charts properly, you can start to really do well with it. I'll take a look at HARP because this is a stock that is breaking a downward trend line from a rising bottom with some abnormal activity. Very abnormal volume. This was also one of the stocks that we day traded today. As a longer term trade, I think it's pretty good. The reason I don't think it's great is you're going to find resistance up here. Now your risk reward scenario is marginal because your entry price is about there, your stop is about there, and you want at least double the reward potential for the risk, and it's just barely to that point. So I'd give this one a 6 out of 10 as well. We'll go through a couple more, see if there's any more decent charts here. Look at one more page of candidates. BKE, you can see the very strong volume, so there's some excitement there. You can see the stock scores are picking up, breaking through this resistance. Notice that it failed to close near its highs of the day. That tells me that the sellers were selling into the close, and that's a bit of a weakness. With that said, I do like to look at the 3-year weekly chart just to see if it's got a good pattern. And that's where I see the problem. You can see a lot of resistance here. You can see a long-term trading range there. Those people likely to sell into any strength, and that's kind of what they did today. So based on that analysis of multiple time frames, which you always want to do, I don't love the setup. We continue along. Let's be fussy. Let's be patient for the good ones to come along. And from today's market scan, I just don't see anything much better than that. It's just a couple of 6 out of 10s, and sometimes it just pays to sit on your hands. I do think that caution is warranted in the market right now because we are bumping up against that long-term resistance. So carry that into the next week or two as we close out the summer and head into the fall when often there is a little bit of a correction. Well, that has been this week's Stockscores Market Minutes. I hope that you've enjoyed it. If so, please click on the like button. It helps me gather more subscribers. Leave a comment if you have one. But most importantly, trade well.